Well, there are certainly encouraging signs coming in from the Indian economy. In fact, the Q2 GDP contraction has been far lower than expectations. Q2 GDP has contracted close to around 7.5% versus our own ETNA poll expectations of a contraction of close to around 8.3%. There's also a favorable base coming into play. However, agriculture GDP continues to support the overall economy, and of course, the rural demand has also been strong, as we have witnessed from the commentary coming in from various management. In fact, if you look at the rebound, certainly manufacturing as well as the electricity sector has shown a fairly good signs of rebounding or recovery. Manufacturing segment growth is back in the positive with a marginal growth of nearly around 0.6%. Electricity growth is back in the positive with a growth of 4.4%. Mining as well as the construction still continue to post a negative growth. However, of course, the contraction has been slightly shallower than what we had seen in the last quarter. Services economy continues to show signs of being impacted on account of the pandemic, as trade, hotels, transport as well as the financing real estate continue to show contraction, although of course the contraction has been slightly slower versus the last quarter. Trade, hotels and transportation segment did contract 15.6%. Financing real estate segment did contract by close to around 8.1%. In fact, if you look at the contraction in the financing real estate, it's been a slightly higher contraction coming in Q2 at a contraction of 8.1% versus a contraction of 5.3% in the previous quarter. Public administration and defense, which is essentially some amount of government spending there, that of course continues to show signs of contraction. And in fact, if you look at the overall capital formation, that certainly has been better in Q1, and however, it is still indicating of a downward trend, and we definitely need more amount of government thrust coming in terms of the overall capital formation. Consumption growth has been negative, and there is hope that it is likely to pick up from Q3 onwards as well. A word of caution also coming in from the chief economic advisor. He does mention that yes, while there are signs of optimism in terms of the overall economic activity, and COVID pandemic has possibly peaked sometime in mid-September, sustainability of the economic recovery will depend on the pandemic. Winter months warrant for a caution, as the second wave of the Spanish flu pandemic was quite intense, and hence a word of caution coming in there in terms of following all the protocols related to the COVID pandemic, as he does state that the current economic conditions definitely reflect being impacted on account of the COVID pandemic. So yes, we need to definitely follow all the COVID related protocols, but certainly signs of optimism coming in there. Most of the high frequency indicators also do indicate signs of recovery. However, the sustenance of demand is key. There has also been one important data point, which was the core sector data in the month of October. That has come in, but it has been the contraction there has slightly deepened more versus the last month, and thus the volatility coming in there in terms of the core sector data. Besides that, in fact, if you compare India GDP growth, well, I would say that when I have compared India GDP growth along with the overall growth of the world economies, the advanced nations as well as the BRIC nations, India performance has been worst after UK. While India degrew 7.5% in the July to September quarter, UK growth has contracted close to around 9.6%. So yes, India has underperformed most of the BRIC nations in July to September quarter, as well as quite a few of the advanced nations as well, and China of course has rebounded back in the positive in the July to September quarter. However, signs of optimism there, and however it is also going to be a long way to recovery going ahead. Some of the economists may still go ahead and further and rather upgrade their GDP growth expectations for the full year.